Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for October 11th, 2018. So, my goodness, how is it that a guy can kind of sound so positive on a day that looks, after a day like yesterday, I should say, tremendous selling coming in. So why would I be positive? Well, if you guys remember, I've been talking about this for a while. I've been talking about the potential that we could see some selling, talking about the fact that fewer and fewer stocks were holding the market up, and that we have been talking about this for months, the idea that there has been a rotation toward defensive stocks. So while I was expecting some kind of a pullback in the market, I certainly in no way was expecting sheer panic to come in. As a matter of fact, I made a trade yesterday during the Right Way Options live session. If we take a look at the moving averages here, the Dow finally pulled back and touched the 50-day moving average here. And I placed I picked up some call options expecting to get some kind of a bounce. Well, that turned out to be an absolute mistake. If we take a look at a 15-minute chart here, it's right here in the consolidation where I had picked up. That was when the Dow was on the 50-day moving average on the daily. And I was looking for a little bit of rally. Obviously, that didn't occur. And I ended up selling out of that position and actually shifted to diamond puts after the failure of this little 15-minute platform here. Just hedging myself in the market, not really advocating day trading, but just hedging myself in the market. My goodness, did panic come in yesterday afternoon. I mean, sheer panic came in yesterday afternoon. And it looks like that's going to continue this morning. As you can see, the Dow right now is looking to open sharply lower all the way down into here, and you can see that right in this area there's actually a pretty substantial level of support, and we're gapping below that this morning. Now what that can do, gapping below a big support level like that, can mean we could clearly after the morning catch some kind of a bounce. But is that something you want to rush into? I would suggest probably not. We're going to see an awful lot of volatility. For option traders, it's going to be very difficult. Implied volatility absolutely went through the roof yesterday, spiking very, very high this morning. It will spike even higher. So even if you find that great entry point and try to jump in with an option, you're going to way overpay for implied volatility. And if the rally does happen, you'll see a collapse in that implied volatility, making it very difficult. Even if you're right on direction and timing, the collapse in implied volatility may make it impossible to make any money. So be really, really careful here. So in a situation like this, why would I why would I be positive at all? Well, first, I've been expecting this. I'm very light on my account, and most of my trades were profitable yesterday because I was short things. But more than that, what's good about this, even though I didn't expect it to drop like this, what's good about this is all of these great stocks that have been overpriced for so long are now going on sale. And if we as retail traders, if we as retail swing traders just let it happen, you know, one of the things that I used to do when I was new in the business is I would fight a move like this. I would think that I could predict the bottom and try to buy that and just get whipped up in the process and my account get chopped to pieces by trying to trade it. Let it happen. Just stand aside and let it happen. Protect your capital. Because when this is over, there is going to be great stocks to buy at much lower prices. It's just as if there's just the big sale is going on right now. How low will they go? No idea. And no reason to try and predict that. All we have to do is wait for that to occur. Now, during that period of time, there's going to be an awful lot of volatility. This will be very, very challenging if you jump into the market and trade it. A lot of people think I can jump in, I can trade with this speed. Remember, this is going to be extremely challenging, even for the very most experienced day traders out there that can trade very, very quickly. These price moves are going to be very challenging. Extreme whipsaws, lots of head fakes, reversals, things like that that will happen intraday. It's going to be really, really tough trading for a little bit. But if we just stand aside and let it happen, we can come back into the market when our edge is returned and we have an opportunity to trade. So just kind of take a breath and back up and reassess. You don't have to trade every day to be successful in the market. Now, clearly the Dow, everything, if we look at here, the index charts, breaking trends, breaking support levels substantially, breaking through 50-day moving averages, breaking on down. Even if we take a look, I'm going to go back here to our moving average chart, and if I go to IWM even smashed clear through its 200-day moving average. I mean, we're just talking about, stepping into, jumping out the window here all of a sudden. And pretty damaging for the market. Technically, lots of damage has been created, and this will take a substantial amount of time to repair. These things like this don't recover in a week or two. It often takes months. It may take through the end of the year before this starts to settle out. So be really, really careful and don't rush. Look for those good quality trades. And here's the other thing. There's going to be things that are trading pretty well. There's going to be good stocks. So look for those in those trades. Remember, though, we have shifted into a downtrend, and those downtrend trades are where we probably want to primarily focus. We want to wait for the rally back and then look for those downtrend type trades. Let's take a look at the SPY, just absolutely collapsing here. Lost its 50-day moving average after trying to hold there. Lost its 50-day average this morning, opening below its 200-day moving average. Let's take a look at the Qs. The Qs reached its 200-day moving average all in one move, just wham, slicing right through yesterday and now gapping substantially below that 200-day moving average. So watch this down in here, falling through that 200. Any bounce back will have to be considered suspect for potential, the potential of more selling, the next leg down after we get a rally back. One good thing that could be in this as well is that we've took it all out all at once. We just like letting the air out of a balloon. It came out all at once, and maybe we can start to recover a little bit faster because of this extreme sell-off that occurred. Let's take a quick look at the VIX. Now, here's where this is what's going to make it very, very challenging for option traders. Here, notice this extreme spike here that's been created here in the VIX. So that means implied volatility has spiked up really high on those options. It's going to make the intrinsic value of those options very, very expensive. And this morning that will spike even more. So even if you buy perfectly at the bottom and time that bounce perfectly, you may find it very, very difficult to make any money, because as a rally occurs, this volatility is going to drop substantially. The implied volatility will drop substantially, deflating those prices that you paid for those trades. Also, you'll notice the bid-ask spreads are going to be very, very wide. Market makers are going to widen those up, so it's going to be very, very difficult for option traders to do very well here. So watch that closely, and just take a breath. You don't have to trade every day. Okay. And I realize there's probably a lot of folks listening that lost a considerable amount of money yesterday. Please don't try to revenge trade to try and get it back all in one day. That's not going to happen. And as a matter of fact, you revenge trade, you're likely just going to compound your problems. Stand aside, let this volatility shake itself out, and then there's going to be some great trading for us ahead. So pretty darn ugly when you take a look at this. T21.22, whoops. T21.22, that 4-week new high, new low ratio. Well, this thing really kind of let us down yesterday. If we take a look at the T21.22, you can see that we have sunk down here now. We were kind of hoping this was the bottom down here, but we have spiked all the way down here. It's been a long time since I've seen a spike come all the way down to this area, and we can even pass through this area, but we're reaching that point of very oversold, and we could probably expect a bounce anytime. Again, it's going to be a very, very challenging bounce to trade, so watch that carefully. Let's take a look at our earnings calendar today. On the earnings calendar, we have 12 companies reporting earnings today. We've got Delta Airlines, DAL, reporting this morning. Looks like they've reported well, popping up here just a little bit, and looking for a little bit of rally. And let's take a look. We also have WBA. WBA is relatively new to the Dow, and you can see it has reported apparently missed on earnings and is being sold off at the moment. Going to open down in here someplace. Those are your most important earnings for today, I think, most notable. On the economic calendar, we have quite a few things going on. You can see we have CPI, jobless claims, petroleum status report, natural gas report, treasury budget, and Fed balance sheet. All of those are potentially market moving. The critical one today, whether anyone's going to pay attention to it or not, with the selling going on, will be the CPI. The CPI, if that comes in showing a little bit of heat, meaning that CPI is showing that the economy is hot, we could see rates spike again. If that does occur, expect some more selling. If the CPI comes in okay, we might settle down here a little bit in the market and maybe catch that little bounce. We have already repaired or moved up almost 300 points, or excuse me, not 300 points, 200 points from the overnight low in the futures. So we've already bounced a little bit, but don't expect too much. And I certainly wouldn't rush in to this market open today trying to catch a low. We could certainly sell off back to the overnight low, substantially lower this morning, with an ugly whipsaw. So be really careful, guys. Be careful. Protect your capital. So with that, everyone, hey, I want to wish you all a great day. And I know this is probably going to be a very challenging day, but please, realize that trading is a marathon. It's not a sprint. We don't have to be in this every single day. We don't have to get in there and mix it up every day as if we're fighting the heavyweight champion of the world. We can wait. We can be patient. We can stand aside and then take that tactical advantage when our edge returns in this market. All right? So plan carefully, plan your risk carefully, and hey, everyone, just try to take a breath. It will get better. I promise you that. So, hey everyone, if this is the first time you've seen these videos, please do me a favor and please, click that subscribe button. Click the follow me button on Facebook. Click those thumbs up buttons. I really do appreciate that. And drop a comment. Those are always well received. Thank you very much for those, by the way. And also, please feel free to share this video with any friends and family. With that, everyone, I want to wish you all a great day. Please don't give up on your trading. Don't give up on yourself. This market will improve. I promise you that. It's just going to take some time. Everyone, Have a great day. Talk to you soon.